Adelaide dwellings increased by 1.4% for the month, 0.6% more than the national average of 0.8%. The next closest cities were Sydney, with values up 1.3% for the month, and Melbourne and Hobart, where values increased by 1%. Adelaide house values have increased by 1.2% over the month, 0.3% more than the national average of 0.9%. They have grown 4.8% so far this year, 5% on this time last year, and are delivering a total year-on-year return of 9.4%. Adelaide units also performed strongly, delivering the greatest monthly value increase in the country of 3.6%, ahead of Hobart, which was up 1.6%, and ahead of the national average of 0.0%. Adelaide's rental yields for both houses and units were also both above the national average. Adelaide houses are delivering yields of 4% and units are returning a 4.6% yield. In comparison, the national average rental yield for houses is 3.2%, while the average unit yield is 4.1%. CoreLogic head of research Tim Lawless said the erosion in housing affordability was slowing the market. The recent moderation in the rate of capital gains should be viewed as a positive sign that growth in dwelling values may be returning to more sustainable levels, Mr. Lawless said. However, the growth trend rate is still tracking considerably faster than income growth, resulting in a deterioration of housing affordability. The erosion in housing affordability is likely to be one factor working to slow housing demand across price-sensitive market segments. We're also seeing first home buyers are at lower levels across most states, and in particular, at record low levels of participation across Sydney. According to CoreLogic figures, the number of property sales across the capital cities has also been trending lower, down 17.9% on this time last year. Homes are also taking longer to sell, with the national average selling time sitting at 47 days. This time last year that number was 42 days. Mr. Lawless said buyers could use this to their advantage. As homes take longer to sell, vendors are starting to apply larger discounts to their asking prices, Mr. Lawless said. Potentially, as buyers gain some leverage in the market and vendors become more flexible in their pricing expectations, this will assist in alleviating price pressures from the hottest markets such as Sydney and Melbourne. Mr. Lawless said the milder housing market may encourage the Reserve Bank Board to lower interest rates when they meet tomorrow. Policymakers will be wary of lower interest rates creating renewed upwards pressure on housing markets, Mr. Lawless said. The strong clearance rates, as well as the fact that dwelling values are continuing to move higher, may make the RBA's decision to cut rates more difficult, despite the low inflation trend and high dollar. If the cash rate does move lower on Tuesday and the cuts are passed on to mortgage rates, the housing market and lending standards are likely to be under even closer scrutiny as policymakers watch for signs of value growth reigniting. Originally published as Adelaide Property Values Up Vermont.